Something massive is happening with SoFi stock, a move that's got Wall Street buzzing and investors rethinking what this company might become. 2025 has turned out to be a breakout year for SoFi, and what's even more interesting is why this growth is happening, what's fueling it, and where it might go next. Let's dive deep into SoFi's current performance, what's really driving the price surge, and whether the momentum can continue or if the stock has already outpaced its fundamentals. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi has been one of the most talked about financial technology companies of this decade, and for good reason. The company's stock has exploded upward this year, catching the attention of both retail and institutional investors. But beneath the hype, there's a much deeper story about how SoFi is transforming from a simple online lender into a diversified financial technology platform. In the most recent quarter, SoFi's growth numbers were exceptional. The company added 905,000 new members, bringing its total membership to 12.6 million, a 35% increase year over year. What's notable here isn't just the growth itself, but the acceleration in that growth. Each quarter, SoFi is expanding faster, a sign that momentum isn't slowing down anytime soon. At the same time, the company added 1.4 million new products, pushing its total to 18.6 million financial products. About 40% of those new products came from existing members, meaning people who already use SoFi are continuing to add more services. This kind of customer behavior is powerful. It shows that SoFi isn't just acquiring new users, it's deepening relationships with existing ones. That's central to SoFi's long-term strategy to become a complete financial ecosystem. The company wants to be the go-to platform for everything related to your financial life: loans, credit cards, investing, savings, insurance, and even cryptocurrency trading. Over time, SoFi has been quietly building this all-in-one structure, layer by layer, quarter after quarter. Recently, they reintroduced crypto trading on their platform and added Level 1 options trading, another step toward making SoFi a hub for both traditional finance and digital assets. This approach reflects SoFi's goal to position itself as the digital bank of the future, one that doesn't rely on physical branches, but instead uses technology and convenience as its competitive edge. While many traditional banks are still tied to costly physical locations, SoFi's digital-only model allows it to operate more efficiently and attract younger, tech-savvy consumers. In the future, once the brand has reached critical mass, maybe 50 million members or more, it might explore limited physical branches. But for now, the digital-first model gives SoFi flexibility, speed, and lower overheads. Now, let's look at the numbers that have been catching investors' eyes. In the most recent quarter, adjusted net revenue came in at $950 million, up 38% year over year, and this growth was faster than what we saw in the previous quarter. The company's financial services and technology platform together generated $534 million, a 57% year-over-year jump, and now represent over half of total revenue. This is significant because SoFi doesn't want to be seen as just a bank or lender. It's aiming for a higher valuation by emphasizing its role as a technology-driven financial services company, similar to how Tesla tries to brand itself as an AI or tech company rather than just an automaker. Investors tend to assign higher valuations to tech companies than traditional banks, and SoFi's leadership understands that. Unlike Tesla, however, SoFi is actually making faster progress in shifting its revenue mix. Less than half of SoFi's total income now comes from lending, with the rest driven by technology and financial services, the very segments that attract premium market valuations. That said, lending still remains one of SoFi's strongest profit engines. The company's lending segment revenue rose 23% to $481 million, supported by robust loan originations totaling $6.6 billion. When combined with the $3.4 billion generated by its loan platform business, total originations reached nearly $10 billion, up more than $1 billion from the previous quarter. But here's what's even more impressive: the loan platform business. This is an area where SoFi has changed its playbook in a big way. Traditionally, SoFi would create loans, hold them on its balance sheet, and service them until they were repaid. That approach tied up a lot of capital and exposed the company to credit risk if borrowers failed to repay. The new system works differently. Now, SoFi originates the loans but immediately sells them to third-party institutions that want to buy those loans. SoFi earns fees for originating and sometimes also for servicing those loans, but the actual risk, whether the borrower pays or defaults, shifts to the buyer. This method is less risky, more scalable, and much more capital efficient. SoFi doesn't need to keep large amounts of capital tied up in outstanding loans. Instead, it focuses on what it does best: acquiring customers, originating loans, and earning high-margin fees. This capital-light model allows SoFi to expand without running into funding limits, a key reason the company's profitability and stock price have improved so rapidly in 2025. The demand from institutional lenders for SoFi's originated loans has also been very strong. Many buyers are attracted to the double-digit yields these loans offer, often around 12 to 13%, compared to the roughly 4% yield from U.S. Treasury bonds. That yield gap reflects higher risk, of course, but for investors willing to take that risk, the potential return is appealing. However, some analysts caution that expectations might be a little too optimistic. If future default rates rise, the third-party buyers could face more losses than anticipated. Still, as long as SoFi continues to manage its origination standards carefully, this business model could remain a reliable growth engine. Now, with all this strong performance, it's easy to see why SoFi stock has surged. But there's also a growing debate about whether the rally has gone too far. Based on cash flow models, SoFi's intrinsic value might be closer to $19 per share, while the market price recently climbed above $30. That's a big gap, suggesting that investors have priced in a lot of future optimism. When a stock rises faster than its underlying business fundamentals, there's always the risk of a pullback or a period of consolidation. In SoFi's case, the fundamentals are clearly improving, but the valuation may be running slightly ahead of itself. Still, long-term believers in SoFi see a bigger vision, a future where SoFi stands shoulder to shoulder with the biggest names in finance, not as a traditional bank, but as a full-service digital finance ecosystem. If SoFi continues scaling its user base, expanding product offerings, and strengthening its technology platform, it could become one of the most valuable financial technology companies in the United States. But for now, 2025 has already proven that SoFi is no longer a small-cap fintech startup trying to gain attention. It's a growing financial powerhouse with real momentum, strong brand recognition, and a clear roadmap for scaling up its profitability. In the coming quarters, the key factors to watch will be whether SoFi maintains its growth rate in new members and products, how much demand continues for its originated loans, and whether its tech and financial platform segments can keep expanding faster than lending. Because if those segments continue to outgrow traditional lending, SoFi could redefine how the market values financial companies, moving away from old banking models and towards something entirely new: a digital-first financial ecosystem designed for the next generation of money management. SoFi's story isn't just about rising share prices. It's about the transformation of an entire business model that's reshaping what the future of finance could look like. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.